Also können wir schon mal eben just briefly welcome everybody, and we were wondering if we can do it in German today, or if there's someone who's not familiar with the German language, and then we might switch to English. The slides are in English anyway, and so if you have just a broad understanding of the German, then we might do it in German, because Christoph had a long day and his English is no, his English is perfect, but maybe it's more convenient and we can easier discuss the issues we have. Okay, we have at least one participant for English, so we do some English kind of thing.
But perfect. Thanks for the feedback. That's great.
Good. All right. Just a brief introduction before we start with you, Christoph. For those of you who are here for the first time, warm welcome. My name is Moritz. I'm one of the co-founders and board members of an association that's called Hanseatic Blockchain Institute. We are located here in Hamburg, and Hanseatic refers to the old tradition of the Hanse, which used to be the entity where many cities all around the Ostsee and even further were using a kind of common system of even exchanging value, and all this was based on trust, and that's something we like about the Hanse, and that was one of the reasons why we named our institute Hanseatic Blockchain Institute and not Hamburg Blockchain Institute. We are an association of about 60 members now. We have two aims. First of all, we want to help the blockchain community in Hamburg and the surrounding area, and Berlin at least belongs to the surrounding area of Hamburg, to help them network, cooperate, first of all, and then secondly, we like to spread the word of blockchain and crypto, because there are so many people still there that don't have an idea of what potential this technology has, and that's the kind of second aspect of what we want to do: help spread the word of the potential of crypto and blockchain. And in order to do so, we invented from the very beginning. So Hanseatic Blockchain Institute started more than 2 years ago. We had Blomo, and Blomo is Blockchain Monday. That's the event we do have today, and this is every week since inception, apart from Christmas. And we always have interesting guests from very different aspects. Sometimes we have lawyers telling us about data protection on the blockchain. We have had a lot of quite cool startups explaining their business models. And then we were discussing about how to invest into crypto and then so on. So the whole range, and that's something I personally like pretty much about crypto and blockchain, that there's so many aspects and views you can have on this topic, on this technology. The good news about Hanseatic Blockchain Institute, it's a Verein under German law, and everybody who's interested to support what we do is invited to become a member. Just go on our website, www.blockchaininstitute with an E, so the English pronunciation, .eu, because we have the vision to become something in the EU some point in time. And then you can click there, and I think the website is in German only, but become a member, and then for only 50 euros per year as an individual, you can join this institute. That's the brief intro from my side. Let's now move to you, Christoph, and then to our topic, which is not explaining the business model of Bitwala or Nuri, the company you're working for, but the topic we choose for today is discussing the potential of cryptocurrencies in the emerging markets. Before we enter that topic, Christoph, thank you for making yourself available for us, being our guest today. Christoph is one of the, I think there are not too many persons like Christoph, because he looks back to a career in the traditional, and I just mentioned he was working in Stuttgart with LBBW in Stuttgart, and that is one of the most, from my point of view, most traditional institutes you can imagine in all Germany. So he has a career in very traditional banking, even though you were driving innovation in your former role with BBW, LBBW. That's difficult in English. And then you decided to move quite early to one of these kind of new neo banks that started several years ago to say we want to be a banking services provider for people that need an account but that have an affinity for crypto. And I think today they have about 250,000 clients, which is quite impressive. So second after N26, is that right? Or
yeah.
Okay, that's quite cool. However, maybe you give us a just brief intro on what made you switch from the traditional finance world into something like that, and then we move to our topic, talking about potential of cryptos in emerging markets. Warm welcome, good to have you here. And if we had a physical event, you would hear a loud applause. And over to you.
Thank you, Moritz. I'm happy to be part of the Blomo, as I just learned. A really good topic and really good name for your gathering. And I would love to perhaps come back in person as soon as the things will be on the ground again and with a beer in hand and sitting on the Blomo table. Basically, you gave very well introduction. But how did I move from traditional banking to now blockchain-based financial technology, cryptocurrencies as a first use case, which we obviously, when you jumped into it, became digging into the rabbit hole. And I think it has also a little bit to do with what we are doing today, looking on an emerging market perspective, because like part of my whole professional life was also to look into business with emerging markets. Even like when I studied economy, I had an angle in developing country economies, and looked into the drivers of development, and the whole development economy topics. So that was basically my first touch points, and from there I never left from even like being personally engaged into looking into news when they come from Latin America, if there's economic trouble in emerging markets, currency crisis, banking crisis in these countries. This is like a topic which I personally am engaged in and never let loose. And then I had the opportunity at LBBW, beginning of my professional life, to also work in trade finance and correspondent banking areas where the bank, as a hub for German businesses and German smaller banks, was engaged in these international financial markets with partner banks in emerging markets, and I was responsible for a certain period of time for Latin America. So I could basically combine my personal interest with business life. And so how does now blockchain come into the equation? If you have seen that business, like also in the years after the financial crisis, I was working when Lehman collapsed, when the German IKB was like rescued by several German banks and the government. When you have seen these correspondent banking systems and how trade finance deals are done, how extremely manual, how extremely imperfect, non-digital, it's crazy how much efforts it takes and how much time it takes to make cross-border banking transactions. Like, it looks like it would be done on fax, and perhaps sometimes it actually is, and it's coming definitely from that age, and not from it's not done in a way you would expect in a digital age and in the era of internet. And that's like, okay, and then it's an eye-opener. And then obviously when a crisis hits, like the Lehman crisis, and when you read in the newspaper that the interbanking markets have tried out and that the banks are not trusting each other anymore, and that has basically a feedback loop into the real economy, that is exactly it. The imperfect way, like the processes and the IT systems are developed from like coming from the 70s, and then a non-regular event hits. And then you definitely, it's basically unveiling these imperfectionalities.
Okay.
And that basically was the same time when blockchain became a thing. And on the other hand, then you read the paper about it and you start to understand it. And then when you see these two words and say, yeah, wait a second, here I have like I have a ledger system, and I have a financial technology which allows me to transfer trustless, cross-border, instantly, unlimited amounts for nearly free. Okay, and currently it's a hard deal to do it cross-border. It definitely takes a lot of time. It's very expensive. It requires a lot of trust of the involved parties. It's very undigital. And then you look at these two things and you say, okay, then this blockchain thing, it will become a thing, right? And my first understanding was that the bank basically will start to just do it. Like the IT guys, because it's a financial technology, I thought that basically the operational teams and the IT departments of the bank will move the bank's IT and how these products are basically transacted in the background and move them to the blockchain. Like I thought so 7 years ago.
Okay.
So
and that was already an idea you had when working with LBBW.
Exactly, and obviously then the typical innovation. So now moving a little bit to my career, then the innovation dilemma hits, right? So it's not like that there is a better technology, and only because it's there that the bank automatically moves there. That's just not happening. So innovation is taking circles, is doing, especially when it's connected to the whole Bitcoin story, which for banks has a very, like we talked about 6-7 years ago, brings so much other associations, so that this cannot be the thing, right? This cannot be where we are going. So obviously, since beginning of this year, things are moving way faster. I'm very happy that my old colleagues and that LBBW, after the time I left, as you are saying correctly, is a very conservative house, serving very traditional and conservative customers, actually really moved as one of the few German banks into projects to bring like bond transactions on the blockchain, to do debt transactions. So they are actually doing more blockchain related than a lot of other bigger German banks. I'm very happy that my old colleagues are doing that, but I'm totally not involved into that steps. I left because I felt that I personally, with my personal energy, I need a case in which, you know, I can bring more of my personal energy into actual movement. And so with this innovation,
got it. No, I mean, that's quite interesting. And that's something I like, because the individual story, why people start when they first heard about or made their first experience, then to ultimately move into this sector is quite different. And I like your underlying saying it was the idea of helping emerging countries to develop a better financial system based on blockchain. But that was not so much banking the unbanked, it's more just having the system work in a smoother and more efficient way, right?
Exactly. So being an economist, and also like just like because I'm the person for that, I love efficiencies. I love to make things a little bit better, right? So that and then it's basically economic theory, then there is more for everyone. So there's more resources everybody can participate on, and especially that counts. And now perhaps moving a little bit into what we're talking about today, why does that especially count for emerging markets? Why is it especially good for them? And our product as of today, so what Nuri is doing in the daily job, that is currently not available outside the European Union. And so it's not directly profiting those people, but like to work on the case to basically, you know, to bring this technology to people, to make it more acceptable. That is also for me like an angle to basically roll that out and pave the way that we have worldwide better financial technology, better financial products, which definitely will make it a little bit better for people in the developed countries, but definitely make lives of people in emerging markets way better. Come on, let's jump into the presentation. Now I think you know why I want to talk about it and why I perhaps have a good background to actually do so.
The message came
and can deliver hopefully a little bit of value here.
So please, share the slides, and please everybody use the Q&A function or the chat function if you have any questions that might arise. We want to have this as interactive as possible.
So perhaps last disclaimer before we jump in. Usually in a meetup like today, there's very often somebody who's very educated, super deep in the crypto rabbit hole, and basically can talk about crypto hash rates and is really like Austrian economics and is very in detail. But we always also have people who are like trying to get first understanding of the matter, and I try to make a way in the middle so that we later have a good discussion. So people who are like very deep questions, we can discuss that in the Q&A section. But and also like people who perhaps struggle a little bit with terminology. Obviously, sometimes we use crypto speech and some acronyms which perhaps you need to catch up later on. Please do so. I'm definitely trying to find a good middle way, and then both sides can jump in on the Q&A section later. So I think today is a very good day to talk about the whole topic of emerging market economies and crypto, because that is actually a slide from one of our so-called Friday celebrations at Nuri. So each Friday we celebrate progress when we have new crypto features or like new things in the app we can look at, but we also celebrate obviously the ecosystem and the environment we are in. So we bring up topics, and I presented some weeks ago the case of El Salvador, and I said, let's celebrate these guys for a very, very bold decision. And we will elaborate on that in this meetup, why that happened. And here you see basically how I brought the topic up, a little bit, some pictures. We have the president. We have in the down left, Jack Mallers from Strike, the company who is currently working for the government to roll out Bitcoin wallets and to make Bitcoin use cases in El Salvador. But it's a strange one, and we will touch on that. What actually is happening there? They are talking about paying with cryptocurrencies. It's a very transactional use case El Salvador wants to implement. And when we would have had this event a year ago, and I gave interviews and talked in podcasts, I very, very often make the case that Bitcoin for payment, no, you shouldn't pay with Bitcoin. If you want to basically use it you want to describe it in old terms, if you want to apply the old realities and make a good comparison, then I very often basically bring up the digital gold use case and say, here, what Nuri is doing and our customers, what they are doing is rather to go into cryptocurrencies for a buy and hold strategy. I personally don't pay with Bitcoin because like every time I did, I regretted so much more some years later that I basically overpaid at the moment of transaction. I use it as a part of my investment portfolio. I have a certain amount I want to basically have, like, because it's certain inflation protection issues, because obviously the increasing adoption is driving up price on the long run. So disclaimer, all no investment advice, but you know what I mean. That is basically how we describe for our current for the current environment we are in Europe, the analogy of how Bitcoin most often is used. And the original white paper was talking about digital cash, peer-to-peer payments. That is what Satoshi Nakamoto described in the white paper. And what is it now?
Just one quick remark. Many people might know it. I remember that when I approached the German BaFin back in 2014, because we wanted to set up an investment vehicle for cryptocurrencies, and there was no one responsible for this topic, and they forwarded my request to the anti-money laundering people. And I just explained to him what it is about, and they said, well, yeah. And then they said, okay, if you want to apply, you can do so. However, let me just give you my personal opinion. I believe that all this cryptocurrency is similar, not to gold, but to cigarettes at the time after after the war in Germany, whereas many of you may know cigarettes were used as an alternative currency, and because someone just needed something to replace the Reichsmark at that time.
A commodity which is used for payment, also a description.
Yep.
So and obviously the reality is it's really hard to directly peg Bitcoin or cryptocurrencies directly to one of the old use cases we had. Is it now currency or cash-like currency, or is it rather a commodity, or is it a security? Is it an investment? Because it's neither and all. And it has several, because it's completely new. It's a completely new technology, and we only try to press it into the old technologies we have, but we need to understand it as a new technology and a new way to transact. And it will find its use cases in different angles, and some make more sense and some less. And what I want to point out here in this presentation, especially for emerging markets, what does it makes sense there, which perhaps it doesn't make so much sense in our environment. We will have perhaps a different use case with these cryptocurrencies. And to go into that, let's look at emerging markets and how they are different, how their economy is different to ours, right? I would argue that one of the biggest differentiators, and also in most recent literature about what makes countries economically successful or not, it's not the temperature and is it close to the equator, yes or no. The current literature is pointing out it's how are economic and governmental institutions formatted, in which way, and are they working? Are they working well? Is there like a track record of good governance? Or is there a lack of institutions? Is there property rights? Are they enforceable? These are the issues which determine if there is like a good investment going on, if people are feeling safe to invest their money in the country, or rather take it abroad, etc. And so institutions, that is an issue. How formalized is it? How reliable is it? Is there trust on institutions? And basically connected to those is also like good governance, but it has also a different angle, the corruption angle, so transparency of governance. Can you trust the public agents? Is there a lot of corruption going on, which makes it hard to have reliable and efficient economic transactions? Another issue we need to see is that in emerging markets, also a little bit connected to institutions, the central bank is also an institution, is how is the monetary policy going? Is there an independent central bank? Or is the central bank helping out the government, or basically is the government using the central bank to print cash? We all know it's not exactly working like that, but like to extend the money supply and to basically even like to curb inflation, to get rid of debt problems in which they were running, or the government before was increasing the government debt. Now there is only one solution: you don't find enough investors, and the interest rates are too high to issue government debt. So what you could do, obviously, is you could use your central bank to extend money supply, bring up inflation, and devalue the currency. And obviously, these monetary policies are very often used. Look at even like a country which is very developed already and is having a very successful economy, Turkey. And in Turkey, if you follow the press of the last months, there's a lot of political pressure on the central bank, and the government tries to get a lot more grip on the central bank exactly for this reason, like to stimulate the economy, but also to keep the currency cheap, or make it cheaper in light of government debt. So, and these things are all connected, and then you move on from the central bank. If you have perhaps a weak central bank, you have basically weak rules, weak support for the local banking system, and you have like high inflation pressure. All of these things are also not one, but also paying into a weak banking system. So also has other reasons. Perhaps you have like very few or like very weak digital or like even a personal identity system, so passports. Very few people have the ability to KYC themselves with banks, right? All these things could lead to a problematic banking sector, which is perhaps not big in size, or if it's big in size, it could be over indebted as well. You have like over indebted household situations. You could have a history of inflation, like in Argentina, which basically every time it happens is basically bringing is basically ground zero for all of the banks in the country as well. So
let me briefly jump in at this particular point, because so your hypothesis is that it's a challenge in emerging markets if there is a lack in the financial system.
Yeah.
However, one would argue that in principle, if the financial system is not working, you might see even difficulties with the technology and with labor skills, and
exactly.
so all other sectors are usually affected in an emerging market. However, do you have examples of countries where kind of everything is quite all right? However, it's mainly or essentially the governmental and financial system that lacks the support it would need to bring the country back on track.
I would say like one really good example, in my opinion, is really Argentina, because Argentina basically had not the worst institutions and was an economically successful country.
Yeah.
But by the pressure of several governments on the central bank and on the monetary policy, basically they went further away from the developing path and rather into basically hurt the economy, so that we are currently talking more about them as being an emerging market than perhaps somebody at the beginning of the 80s would have done. And also the banking sector was in Latin America was a leading banking sector. Today you have a very, very weak banking sector because of the history of monetary crisis in the monetary policies. And most likely you would also find other countries which have like perhaps a strong banking sector, but have problems in other areas. For example, Brazil, you could argue, but Brazil has quite strong leading in the banks, but the penetration in the country is sometimes not as big because people lack access to banks, and you have rather problems with a high bureaucracy, with corruption. You have problems on the other end of the spectrum. So it's multicultural, but all these things here basically play also a little bit together. If you have a crisis in one of them, you most probably will also have in the others.
Yeah.
So, and access to the bank accounts, I think India always comes up as an example, that you have like a huge amount of population which is illiterate, or doesn't have like a way to prove their identity. So, and these are all issues playing in a very high rate of unbanked population. So these are very different realities as we have in developing countries. Just to run through them. I talked to the Green Party some weeks ago, and also obviously I was like under pressure to describe why Bitcoin is actually, why there is a case for Bitcoin, why it should use any amount of energy at all. So, and then he said, yeah, okay, would you really need Bitcoin in Germany? And then it's way harder to explain, because you have a functioning central bank, you have functional institutions, corruption and transparency issues still are, but they're not as much, not as obvious. We have a strong banking system. Everybody has access to that banking system. So then there's privacy issues, etc. So very different angles. But it's way harder to describe why a cryptocurrency makes sense. But here I want to point out why all of these issues. And obviously, it's always interesting to use Bitcoin as an example, but I don't want to limit it to Bitcoin. So we talk about basically the technology Bitcoin has paved the way for, peer-to-peer, blockchain-based cryptocurrencies, decentralized cryptocurrencies. That is the case I want to make, why they solve main issues emerging markets currently are having. Institutions. Cryptocurrencies, decentralized cryptocurrencies, have a very interesting, very new internal system of checks and balances built into the code behind the cryptocurrency, right? So Bitcoin, for example, has a set of incentives and a structure between miners, nodes, and users, which are holding the whole blockchain and the economic transaction in balance, and give very interesting incentives for these parties to continue in their role. And it creates self-sustainability, but also a system where one of these parties cannot overrule the others. They need to work together, they need to come together to move forward on the blockchain. And this is a reliable set of institutions on code. And that basically give you this foundation. You build your economic decisions and you build your further use cases on. And again, in emerging markets, you very often have exactly these rules set, like that it's written in stone and enforceable. That is not given. But in cryptocurrencies, the rule set is in the code and it's definitely enforceable. And you can look at it every time. So looking on these governance issues, if we talk about can basically somebody maliciously overstep the code of law? Is there a rule set of corruption which leads to an outcome which is not the optimal outcome, and different non-economical decisions are made to decide for something? And I would say with the transparency cryptocurrencies are creating, you exactly tackle these issues of who is deciding for what in the economy and making it visible to everyone, and is definitely a tool set to enforce, to fight against corruption. So another plus point cryptocurrencies bring into the economy in an emerging market setup. Monetary policy. And that is something we will elaborate the El Salvador case a little bit stronger against. If we talk about Bitcoin, for example, that is the best case you can make. 21 million Bitcoin, that's it. That is deflationary by design and gives people a very strong anchor point of the value behind one Bitcoin. And you can rely on that one Bitcoin always being the one Bitcoin in the group of 21 million. And now you would argue, okay, wait a second, but cryptocurrencies are so volatile in price. How can that be an anchor point? Why can that be better than an internal currency? Or like take for example El Salvador, which doesn't even have a currency anymore. They are dollarized, meaning the internal currency is the dollar. So there is no central bank issuing own currency anymore. They are using the dollar as the main currency in the country. So they have pegged themselves. Also, by the way, one thing Argentina did with the Argentine peso before one of the worst crises they had in 2001. The currency was so volatile that they pegged it to the dollar. But that's still, like, the dollar seems for us to be stable in price because we are used to think about fiat currencies being a stable currency. But if you look on the longer term, inflation always is an issue. And if you have like a 4 to 5% inflation rate, after 15 years, your currency is only half of its value. And I would argue that this is pretty strong. And another issue you have as a dollarized country, for example, there were even like dollarized countries not so far away, not dollarized, but euro-sized or Deutschmark-ized. Like some Balkan countries basically were using Deutschmark in the 90s as the official currency in the country. Basically, every transaction was done in DM. And so we need not to look so far. But what is the issue? Like you say, okay, that's better like Bitcoin because it's less volatile. But you have a very huge monetary policy issue. You are pegging yourself to the monetary policy of another country where the central bank is working in their capacity of being a body of that country. So the the Fed is working in the interest of the American people. They're making their monetary policy decisions for the US as an economy and for the people of the US, meaning you are basically you are importing the monetary policy of the US into El Salvador, which is a very different country by design. And like you remember the discussions we have with the Eurozone, that Italy, Spain, Portugal needed perhaps a very different monetary policy at a certain point of time than Germany needed. And that in El Salvador to the US, the gap is so much bigger. And currently, the Fed is printing money, is creating inflation in the US. And now you're sitting in El Salvador and you wanted to peg your country to a currency which is stable, but it's not stable anymore. And that is why that is leading to like that prices are rising in your country, but you don't want to expose your population to rising prices for bread and butter. And that is exactly what you don't want. And so that is why they start to think in alternatives. And that is why they brought up, could Bitcoin perhaps and payments in Bitcoin be a solution for the dollarization and get rid of dollarization? And can perhaps the volatility of Bitcoin, is there perhaps a tool to move away from that?
Yeah, Greta, all these points you're making here are explaining why crypto, and you exemplify crypto with Bitcoin, is superior to a bad kind of legal tender in certain situations. However, is this based on the hypothesis that you would replace ultimately the existing legal fiat tender by crypto, or would you think of a system where both of them exist in tandem?
I would argue that there are countries which, if you don't have your own monetary policy, your own central bank, your own currency, yes, I would argue cryptocurrencies can be a full replacement. And to be honest, it would be better. We will come to that. Okay. Because like we still have obviously the volatility issue. Let's come to that later. Yeah. So and so weak banking systems, no brainer. Like the blockchain-based financial system is just better. We don't need to talk about that. It doesn't have opening hours. It's cross-country. It's unlimited amounts. It's cheaper. It's more efficient. It's just better than a banking system. And that is the topic, obviously, you create access to the technology. And right now, obviously, we are in an inception point where it's easier to have a mobile phone and access to technology than to a bank. So the penetration rate of cell phones, Africa, India, Latin America, way higher than bank accounts. I would say there's identity issues. That is perhaps the new topic we will be coming on the next slide too. So wrapping this up, there can be points of value a cryptocurrency-based payment system and cryptocurrency-based legal tender can add to emerging markets. There's other issues coming on top. Like just a small reminder, if we talk about a permissionless blockchain, for example, there comes like the whole censorship-resistant topic of giving more power, again, in a decentralized way to people and taking another attack vector of the country to control its people. To like if there is like political turmoil, or like the country wants to oppress their inhabitants, if they cannot access your bank accounts, freeze bank accounts, perhaps of people who are demonstrating, or like the opposition party leaders, etc. If that is not doable by an authoritarian regime, there comes another issue on top. But so, and just a small side note. So now coming to things which you would then, if I argue in this value cryptocurrency can add, it still adds certain challenges. First thing always coming up, what about scalability? But if now all people would start to pay with Bitcoin in El Salvador, network fees, even like in a small country like El Salvador, network fees would go through the roof. Too many transactions, mempool is too full. The Bitcoin blockchain doesn't have the block size to put all of these transactions in. So everybody would fight for block space, network fees going up. Scalability issues, let's come to that later. price volatility. So now it's arguably, do you want to accept the issues which dollarization brings, or is it perhaps Bitcoin volatility that you perhaps need to adjust prices? But if you like, if you have perhaps if you have prices which are shown in a digital way, you could perhaps then always adjust price to Bitcoin price movements. You could take out price volatility. There's another angle to that later. I'll come to the next slide again on this challenge. And then to connect it to scalability, energy consumption. If we talk about a blockchain also always means it's inferior to a central database. So it's better in decentralization. It adds value through the decentralization itself, but obviously to keep so much distributed ledgers has way more energy, and the proof of work concept adds energy issues to the table we need to discuss. And you have still, also like in emerging markets, nobody brought up really like the conclusion on how do we handle it from a regulatory perspective, and what about taxation? So if you use it as a matter of payments, yeah, what about now prices are increasing and you're cashing out to another currency? So we are used that legal tenders, if you exchange them, that there's no capital gains tax, right? So also an issue emerging markets would need to look into if a cryptocurrency is volatile, like even USDC, it's not exactly always 1.00 US dollar, right? There's sometimes the prices are moving on exchanges. So is now, if you move out of USDC, is there capital gains you need to tax? Also question each separate emerging economy would need to answer for its citizens to make it really adoptable. Yeah, and I still argue, even after raising all of these issues, that is basically more to, we already brought the question up earlier, would I still argue you should move to a legal tender on cryptocurrencies? And obviously for the exercise of this event tonight, I obviously try to now make really a point. I would say, yes, do it. El Salvador, I cheer to you, do it. Move to Bitcoin, move away from dollar. And to tackle here a little bit these challenges I already brought up, to answer myself, come on, let's face it, the technology is moving so fast in the crypto environment. There's so much investments done these days in second layer technology. For example, just one of the examples to tackle scalability. If we talk about Lightning and Liquid on Bitcoin, Matic on Ether, there is solutions which, by the way, will be applied. Lightning will be applied in El Salvador, which people always forget. There is already a functioning scalability which can be built into the Bitcoin network on top of it. So I deliberately not only talked about Bitcoin, but about cryptocurrencies. So a design like it is Bitcoin showed us is possible. And there are mechanisms to make cryptocurrencies stable. That is another, if you want to move away from only by from the monetary policy of a different country, but you can find different stability mechanisms. You can peg a stable currency to a basket of assets. You don't have to peg it to a currency and then be exposed to the monetary policy of those, right? I would argue that the use cases don't end where we are right now. It's not only digital gold and only payment. There's also the whole area of disrupting technology around DeFi, which basically can replace a full banking sector and an inefficient and weak banking system. So there's an outlook, even an additional opportunity coming on top by DeFi for these emerging markets. The regulatory issues. Right now, what we see is there was, like, for the last 10 years, there was a lot of retail demand for Bitcoin. Trading, speculation, early adopters, enthusiasts. So there was a lot of retail interest. Now, since some months, we see a lot of institutional interest. And institutional investors and use cases need a lot. So if you make a personal investment decision, if the regulation is not perfect, you take a bet. You will say, come on, I just do it. Let's see what happens. But like if you're working in an institution and you make a decision and there's a board, there's a director, you need rule sets around it to actually even make your internal decision and bring it through. So institutions right now coming into the space are asking and pressuring policymakers to set rules on the regulatory landscape, so banking regulation, financial markets regulation, as well as tax regulation. So they are saying, come on now, dear politicians, we need to know what it is. Please tell us what it is, make the laws, and their whole lobby organizations are now starting to move the whole policymakers. And a last topic, I'm personally very much concerned about climate change. That is a topic we need to address. And there's two angles to talk about it. First, in my opinion, it's not a solution to say, yeah, but other things are also consuming energy. What you need to do is to set it into perspective. So does a cryptocurrency have an added value to use whatever amount of CO2 it uses? And if it's really only speculation, if it be really only trading it around from one wallet to the other so that people can make money out of it, I'm not sure if that would be it. But what I wanted to show here is that if you only look into a developed country and in the use case in developed country, you would miss a lot of value this technology can offer to the world and to people who are very often forgotten. And then to set the amount of CO2 into perspective of what added value it can bring, I doubt that you would find other technologies which we just accept that they use CO2, that they can make the world a really better place, as cryptocurrencies do for these people who are very often forgotten. So I would say this is the one aspect, and obviously the other aspect is if you take a snapshot of Bitcoin blockchain and energy consumption as of today, is that really the right angle to look at it? Because the whole space develops so fast. We see that mining farms are now, with the public pressure, moving very much into more sustainable energy consumption. We see that the technology itself, proof of stake, different discussion. Is it better or not? Is it solving the issue or not? But I would say the snapshot as of today is also not telling the whole truth about the actual amount of energy. And then if you have these two things, it's becoming more energy efficient and or like climate efficient, and it's perhaps adding more value than a lot of people think, then I would say the carbon question you can answer with a yes. Debatable. So that is, I think, everything I wanted to give you as like my thoughts on the issue and my input on the issue. Super happy to discuss.
Great, yeah, thank you very much. Pretty cool. I think we have two remarks in the chat that point in the same direction. So we talked briefly about countries that just have a dollar, so they don't have their own currency. And Dennis is asking, so in a scenario adopting cryptocurrency that is not issued by the central bank would harm the sovereignty. And Cyrus is pointing in the same direction, saying you swap Powell from the Fed against Elon Musk. So can a country afford to give the power to impact the monetary policy out of their hands?
I would the argument I'm doing here for this exercise is there's countries in which like the residents. So who do we talk about? About can the politicians afford to give the monetary policy out of hands, or can the inhabitants in which what is their interest? And what I have, like, I'm observing the space since I'm a little bit older than I look like. I'm 25 years. I'm very much looking into emerging markets. I would argue for many cases, it would be better for the economy and the inhabitants and the people of the country to give monetary policy out of the hands of their politicians. And yes, perhaps even worst case, give it to Elon Musk, perhaps would be better than, because the politicians of the country have sometimes an incentive scheme, which is very much not in the interest of the inhabitants.
Which implies a bad government. But if there's a good government and everything is working well and so on, giving up the authority and the ability to impact monetary policy is something many politicians in a developed country, we're not talking about emerging markets, in a developed country would be very, very reluctant, and maybe for a reason.
Yeah, it's a tough discussion point, right? Like, because there is obviously very strong Bitcoin maximalists who would argue that this counts for every country and for every economy. They would say in the Eurozone we should separate money and state, like church and state were separated, and that our mindset as of today cannot understand a world that cannot because we are just so used to that politicians basically institutionalize a central bank, and then the politicians decide who are the central bankers, so that all of that is connected, and that's just, it was always like that, and it's working somehow. So we cannot believe that there is a different alternative, like the same was with state and church. So there's like the Bitcoin maximalists. I want to, in this exercise here, I just want to make the case for really bad governance and countries with really weak institutions, like I showed on the issue list of what these countries are facing. And this is a different discussion I don't want to have today, like for if that counts for developed countries.
Okay, even in countries that are in a difficult situation, there are issues and obstacles, and we have a question in the Q&A section, which I might just briefly read to all of you. Fong is saying, I'm currently in Myanmar, and the country is undergoing a military coup since February 1st and are in a banking crisis. I think that's obvious to all of us. It's a cash-based economy, local currency with cash USD used for savings, and banks have restricted withdrawals in fear of a bank run. The local currency has lost trust, and many are looking to convert their savings into something else, which is a situation in several emerging markets, and I think it's similar to what we see currently in Afghanistan as well. Yeah. Nonetheless, it's pretty difficult to compare these countries. The question is asked, we are looking into crypto as a savings solution, which might work. However, the junta knows crypto is a threat and are not friendly towards it, very different to El Salvador. Citizens are unable to pass KYC on crypto exchanges. There are challenges such as getting people to choose BTC over USD stablecoin, or to value crypto for everyday transactions instead of just saving. And the question he's asking is, do you have any case studies or key items, stakeholders that are needed for us, for the people of Myanmar, to help locals on ramp to crypto?
Wow, this is a very specific question. I'm not familiar with how exactly identity situation is in Myanmar, what services are available there. I'm sorry that I cannot help in more detail, but it makes basically the point I also made before. Like, there's like, I'm an economist, so the presentation was very much done from an economic perspective, why cryptocurrencies are an alternative to a monetary framework in an emerging market economy, right? And technology-wise, perhaps advanced to banking systems. And then they make this one note about the political impact, the permissionlessness, the censorship resistance. And that is a political and not an economic point. So it doesn't help a country economically in the first instance that politicians and central bankers are not able to freeze accounts, to exclude people. Like in China, that is actually happening. So if there is political reasons to punish you, the government is actually forcing people out of banking systems and services, so that their daily life becomes really shitty, I need to say, so that you cannot book flights anymore, you cannot travel anymore. Like, it's punishing you and holding you in line in a different way. And if I can freeze your accounts, and then I basically have another pressure point on my inhabitants. And so it's definitely also a personal freedom issue to have access to cryptocurrencies. And so this could also be the case for Myanmar, but again, like it's a little bit different way of argument than the one I wanted to make.
Definitely, that's a valid point, that if you live in a country where the regime is not supporting crypto, then you should not try to undergo a KYC account, but try to set up a wallet which cannot be easily associated with your name, and then using the advantages of anonymous transactions, even though from a regulatory and taxation point of view, this is nothing we want to support. But in a situation where crypto is kind of the last resort, presumably there should be ways. And I mean, DeFi, and there are still many crypto exchanges out there where you can at least certain amounts do transactions without a full KYC. I don't know what you think about that. So
exactly, the KYC issue, that is a whole event we can hold the blue more another time around. Two schools of thought, right? If we currently look at cash, just like printed money, one of the key features is that you can pay and you can transact without a KYC. And so if we talk about cryptocurrencies as a form of digital cash, shouldn't that be one of the features exactly that? That again, like the driving force behind the Bitcoin white paper and Satoshi Nakamoto's peer-to-peer cash, besides bringing finally digital paper on the digital solution, that was the one thing, like to solve the digital that you can have a unique digital asset and not a copy of it like MP3s. So this is one angle, but obviously privacy concerns of having a way to transact online by keeping the same level of privacy that was a driving force behind the original Bitcoin community and where this all developed from. So this angle would very, very much argue for that cryptocurrencies should be as anonymous or pseudonymous as possible and should not have any KYC requirements. And to be honest, you still can do that. If you come to my house tonight, bring 200 euros, give me the 200 euros, I give you peer-to-peer from my wallet to your wallet on your phone, I give you Bitcoin. We can do that. And that is one of the key features. You still can do that. And in countries like Myanmar, people can do local Bitcoins and just like transact without the government being able to interfere. There is a pseudonymous possibility.
Nonetheless, I mean, tracking what happens on your wallet and tracing where it goes and so on.
As long as you don't
eventually lead to a wallet that's associated to Nuri, because some of your wallets are associated with Nuri, and that might bring you in trouble. We have a few more issues, questions, remarks. So first of all, I was asking about the European situation. Christine Lagarde tends to be reluctant, that's what Arvid is saying, about Bitcoin and even stable coins, and wants to help to promote the digitalization by providing digital euro, which, as we, I think, all agree, is something entirely different from a Bitcoin-based system. From Nuri's point of view, I mean, if you have the European Central Bank obviously not acting in or supporting someone, is it an issue, or are you sure that you're eventually going to win?
I'm personally and business-wise highly disappointed by the outcome of the discussions in the ECB of how to proceed with the central bank digital currencies, CBDC. Yeah. Basically discussion which very much came up with the Libra threat, let's call it, and then suddenly everything was going wild. Top-notch strategy. So, first of all, these discussions were not made ECB internally, right? That you would say, okay, some bureaucrats which perhaps didn't understand exactly what's going on, and they have so much other things to do. There was perhaps a working group. Highly paid strategy consultants, the BCGs and McKinseys of the world and Big Fours, basically were engaged in different projects to educate the ECB and to propose solutions. I don't know exactly, and I cannot quote exactly what they told ECB, but that was not their proposal. So these highly paid guys at least understood the advantages if you move to a form of CBDC, which is kind of blockchain-based, can be a permissioned private blockchain. It's still not perfect, but it would be way, way better than what we see as the proposal which came out from ECB. Basically, a central register of like up to, I think, 3,000 euros of a sort of digital cash, which is partially locked in and partially digital and not. It's disgusting. And I don't need to quote Nuri and my position. We are member of the BDB, Bundesverband Deutscher Banken.
Yep.
So the lobby group of the traditional, not like neobanks and crypto banks, like the traditional German banks. And they have a really, really good paper published, basically as a discussion paper and for policy making towards ECB. Okay. And just read that. Just read that. It gives you very good understanding of how disappointed we as all banks, not old ones, new ones, crypto banks, are about the way to move forward on an opportunity from a new technology to move our payment system to a new level for programmable money, to have use cases in the economy with like fractional payments, fast payments, cross-border, like the whole range. And it's a very big missed opportunity, which will be punished by the market, by the economy, like decisions of private businesses to decide for different countries to do their business in, different solutions. If there's a private solution like DM, still perhaps it will be available. Then I just use that one, right?
All right, but I mean, the BDB is arguing towards digitalization and the digital euro, or is it about embracing cryptocurrencies and opening the doors for crypto?
We are still exactly this. We talk about a CBDC. So the discussion paper is about how to implement a CBDC, and like from the underlying technology. The BDB is also very open about cryptocurrencies. To be honest, like they're also at, but that's a different angle.
Okay. There's another remark in the chat room which goes into your direction of, so how would you define the ideal environment from an economical point of view? And so Max in German is asking if not even for developed countries, it might sense at some point in time to abandon the central bank and the which essentially means abandon a monetary policy and replace it by something that's decentralized, which is going even further than what Satoshi Nakamoto wrote in his initial paper. He just wanted to create something that's not impacted by the governmental monetary policy. However, it was not saying let's get rid of monetary policy.
Yeah, exactly. I think I made the point before that some Bitcoin maximalists and all people who follow very strictly the Austrian School of Economics, they are arguing that even in developed countries, separation of money and state, you should move away from this hand-in-hand handshake between central banks and politicians. And I would say it's way harder to say, because there's like in these developed economies, there's a very the whole economy is it's a very complex economy in a fragile state of balance. And I personally I'm very careful about when you make like really big changes in the setup, because it's such a complex system. And if you make big changes in very complex systems, that can lead to very unplanned outcomes. So I mean, this discussion is so much more complex than in an emerging market where the economy is already so imperfect and you have so much opportunities to catch up. So many things are already going wrong. So that I would argue this still an experiment, but that experiment has so much the risks versus opportunities. So, that set is tending way more into opportunities. In a developed country, in this experiment, you have a lot of risks. The question is how many opportunities are there? Yeah.
All right. I've one more question. When on page 6 of your presentation, you mentioned that in an environment where the banking system is based on Bitcoin, or transactions are based on Bitcoin, there's no risk for bailout. And I was wondering if that really holds true We know that there's a maximum of 21 million Bitcoin. However, with DeFi becoming more and more kind of usable, we will get to a situation where there might be not necessarily a bank, but a lender who's lending Bitcoin to someone and thereby creating money that counts into M2, M3, or whatever. So ultimately, could you imagine that there is an economy based on with a legal tender being crypto, maybe Bitcoin? However, coming to a situation where banks need to be rescued or lenders need to be rescued because they lend out more, and I'm not sure whether you can entirely say Bitcoin is a currency where there will never be someone needs to be rescued.
Yeah, I would good topic, Morris. Really very thoughtful point, and I agree with you. Like if we look on lending protocols, or like protocols which later will be derivative protocols, liquidity pools. I would also say it could be that one of these protocols need to be rescued because like the tokens were, let's say, in a hack. But like the protocol has such an important role in the economy that somebody would inject, basically replace the liquidity pool which was hacked just to keep it going, and it would be in the interest of the economy. So the policymakers, rightfully perhaps even, would bail out the protocol so that the economy is not hurt. Very good point. About Bitcoin, I would say the Bitcoin network and the Bitcoin blockchain not, and the decentralized Bitcoin protocol, I would argue not. If Coinbase becomes a very important intermediary, yes, the intermediary perhaps needs a bailout. But what I propose here is obviously a way more decentralized approach than using these central counterparties. So what they are rolling out in El Salvador is basically everybody has a wallet on their phone. And then if we are in the original sense of it, so really a peer-to-peer network, and then no. If it's like the pure theory.
I mean, in a world where institutions are more and more moving into Bitcoin, and from a transaction point of view, we will need something like Lightning, and we will have institutions that run a book of Bitcoins and that have assets and liabilities in their own book, and there might be an imbalance for just in the Lightning balance, something like that. I mean, it's new to think about, and
yeah, I would say like what always speaks so much for Bitcoin is like the sheer size and history of the network. Every 10 minutes a block, constantly, no matter what happens. And yes, year one, it's a discussion, but like the whole size and also the honeypot for potential attack vectors, it has been over years, is basically now giving it a lot of historic proof that that is very safe.
All right. Okay. As we have the opportunity, we come to the end, but to talk to a CEO of a German regulated bank that's actively into crypto. How is the discussion about the capital adequacy rules? And so is there a
Look at my LinkedIn. I have made a LinkedIn post some weeks ago. Our head of finance, Markus, made a Medium article about that. We are happy about it. People like, basically, that's also how I basically made my point on LinkedIn. People always think that all policymakers, all regulators are only against crypto and do everything which makes it as hard as possible. Right. And then obviously banks are from the other side are making the point, oh, we would like to do crypto for our customers, but it's so hard. It's like the regulators make it nearly impossible for us. BS. I call BS on that. Read the Medium article. The rules are there, and they are tough, they are harsh, but they are doable. And I better work with rules which are harsh, but they are there, than with none at all. So I'm happy that policymakers and the Bank of International Settlements actually are moving towards a certain crypto regulation, and you can work with it. Okay. So the whole thing, why banks are not offering crypto, and that is like the only point I want to make for Nuri tonight. That is like, because like closing the circle to my introduction in the beginning, banks have so many other issues why they cannot offer cryptocurrencies to their customers. They just don't know how to do it. They don't have the internal departments. They don't have the innovators. They don't think, like, if one department would like to do it, all of the other departments say, oh my God, what that means for us. We have so many other things to do. Now you come with cryptocurrencies. And how should we do that in accounting? And no, we don't know. Please come another time. We have so many other projects. So there's so many other excuses.
So it's not always regulations that's the reason for not being innovative.
So I need to excuse myself. The door is, the bell is ringing. It's my food.
That's the first one who wants to exchange 200 euros in cash. Christoph,
give me a second. Give me a second. I need to take it.
I mean, we are close to the end. They're queuing outside his door already with the cash. Oh, it's a pizza. 10,000 Bitcoin. All right. I don't know if it's going to come back. Just briefly, as he mentioned, LinkedIn. Please look at his articles. Please feel free to look at the Hanseatic Blockchain Institute LinkedIn page, because our new working student Jan is actively trying to get more traction on our LinkedIn profile, and we are happy for everyone who chooses to follow our LinkedIn page profile site. So it's a little bit harsh to say thank you to him if he's not around. So any further questions or remarks? Please, everybody, feel free to share your views. Let me know what.
Sorry for that, but basically don't have time to cook tonight, so ordered. And if you don't take the door, food is gone. That would be terrible.
Okay, that was food. Yeah. So we were just wondering if that's already the first participants coming to your place and waiting to exchange fiat cash against crypto.
Right.
All right. Once again, thank you very much. I think it was quite interesting, particularly with your background to learn about your ideas and perspective. And as always, for me as well, crypto space has still lots of food for thought. And I promise that some of the remarks you made today will let me think about in a little bit more detail. Christoph, once again, thank you very much.
Thanks for the invitation. Next time, Plomo on the ground in Hamburg.
All participants, thank you for being with us, and looking very much forward to hopefully seeing you at some point in time in a physical event. We might do something on the 22nd of September here in Hamburg. So maybe you just mark this particular date with a pencil in your agendas. All details are likely to come in due course.
Cool.
Okay, Christoph.
Have a nice evening, everyone.
Hat Spaß gemacht. Vielen Dank. Tschüss allerseits.